All right, Tim, you ready?
Ooh, fourth quarter.
How about 2020? So there's no question 2020 was a year for the record books. All right, so fourth quarter actually ended up being a very busy and strong quarter. Tim, what are the numbers?
When you look at fourth quarter as a standalone compared to fourth quarter 2019, it's relatively flat. So that we saw 232 contracts signed above the 4 million mark in fourth quarter 2020, and that's compared to 229 signed in fourth quarter 2019. So relatively the same.
Almost exactly the same. Interesting stat for all of 2020. The number of contracts signed as compared to 2019 was down 20.6%. This is for the overall market, all price points. Specifically for the luxury market, 4 million and above, the number percentage down was 39% down 2020 as compared to 2019. So the luxury market was down in terms of contract signed was down that much more.
So it was really quiet in second and third quarter, obviously because of the pandemic, but we did see momentum pick up in fourth quarter. So on paper, when you look at fourth quarter alone, it looks good, but you do have to take into consideration that we had all this pent up demand and we got back to where we were on 2019, relatively, right at the same level. Yeah. Why do you think we saw so much business get done in New York City in Q4 2020?
Tim, the reason is that there was so much pent up demand from a relatively slow second and third quarter. And in addition to that, we had a super strong stock market and sellers are more negotiable than ever, and they're willing to negotiate. So we're seeing deals get done, a meeting of the minds, which we talk about all the time. And that coupled with record low interest rates for mortgages, it's like the perfect storm. So I'd say all of those things combined is why we had a strong fourth quarter and it feels like we're off to a strong first quarter. And the average decrease from, again, the original asking price was 12%. Now, that doesn't mean it was 12% and that's where the deal was done, but that 12% off of the original asking price is where offers started to be made and started to come in. And people were actually receiving offers. And this speaks to, again, that sellers have more negotiability. They have to be realistic and they have to come down on their prices if they start out priced too high.
Yeah, I think it also speaks to the fact that the importance of that original pricing is just so strong. And you always say that.
Yeah, there's no question. We talk about it all the time. Price right. Price really where you think the value and the market is. This is certainly not the market to be pricing high or testing the market in.
Yeah. And I also think in fourth quarter, we got through the election, the vaccine came out. So a couple of other cultural things are giving people confidence that we're moving forward. And I think that definitely helped buyer confidence as well.
That is an excellent point. There's a confidence, a hopefulness, and in the market, and you can feel it. We can feel it with our buyers and people that are out there. Listen, a lot of people may not physically be here in New York City. We know lots of people that are relocated temporarily to Florida or to the Hamptons, but it doesn't mean that they're not here permanently. They haven't given up their homes. In many cases, we're seeing they're actually trading up. They're looking to take this opportunity to get a deal that they could not have gotten 2, 3, 4 years ago. So there you have it. That's our Q4 recap and a little bit of our, God willing, our true prediction into 2021. If you have any thoughts or questions, let us know. Thanks.
Thank you.